Hi, this is Neil Clements, and this is The Real Deal with Neil. Today, we're talking about the 2025 real estate market. It's been up, it's been down, it has been all the way around. And gosh, buyers are fighting back. It used to be during the COVID timeframe that buyers had buyer's remorse because they had to overpay for properties. There's free money everywhere. But now, it's the time of buyer's revenge. So let's get into this and how it impacts investors today. So if you ask most land investors or even house investors, how has the 2025 real estate market been so far this year? Majority of them are gonna say it's been incredibly tough. And the reason they're gonna say it's tough is because we've had slow home sales, we've had prices negative in most areas, we've had supply just growing in most areas as well. And all because of that, it's made it substantially harder for sellers to sell and easier for buyers to buy. And that's really interesting. And what I want to do to start off today is I want to take a step back and I want to tell you about how we got here. So if we take a step back to when the virus was happening, COVID, early 2020 going into 21, what happened was obviously rates went down to near zero, 2 or 3% to buy a house. For business loans went down to say 4 to 5%, very, very low, almost free money. And so what happens when you have almost free money? Well, asset values, especially real estate, inflate like crazy. And so that's what we saw. We saw bidding wars, we saw competitions, especially in the southern states where excellent weather, freer politics, and many other reasons. People all across the United States were migrating south to places like Florida, Texas, North Carolina, South Carolina, Tennessee, Georgia, you name it. The southern United States was expanding and it was growing like crazy. And this was really heavily due to migration, in addition to the free money policies and things like that. Then what happens in 2022? Well, all of a sudden rates go from near zero and double and in some cases even triple within the course of 90 days. So our market as real estate comes to a halt, goes down in price 5 to 10% in most markets. And then you continue going, and now we're in the middle of 2025, 3 years later, and we have no rate relief in sight. We had small rate relief, just maybe a half point happened late last year, but no rate relief in sight. And nobody that I listen to or follow was predicting that we would have rates this high, this long. And so what did all of this cause? Well, all of this caused what some are calling the Great Stay, where everybody was migrating from 2020 to 2022, middle of 22. Now from 22 to 25, people aren't moving. Jobs are not as prevalent. Money is not as prevalent. And so people aren't moving like they used to. And so what this is doing is now the hot southern markets that used to be the boom markets of the early 2020s, now in the mid 2020s, 2025, they're no longer booming. And in fact, they're going down, especially in, for instance, Austin, Texas, has lost a very good amount of pricing over the last 6 months or a year that this has been going on. And essentially what's happening is that even though we're keeping a lid on supply, there's not a lot of sellers still wanting to sell because they have such low rates. They're not going to want to go to a 7% rate when they have a 2.5% rate. We're keeping a lid on the supply. There's not a lot of new sellers compared to previous years. But what's happening is the supply of buyers, the demand for properties is so low because prices haven't moved in a meaningful way. They're starting to, but they haven't moved yet, but rates are still extremely high. And so in short, what's going on is that sellers are still selling at the same amount that they were as far as volume, but the buyers aren't buying. And the ones that are truly having a buyer's revenge. They're negotiating fantastic deals. They're negotiating great repairs. They're negotiating good prices. And so for the buyers who are out there buying, this is an incredible time to buy. For the sellers, it's still a really good time to sell as long as you have a correct pricing strategy, and really you need to sell. We're also seeing sellers' properties not selling are taking them off in record numbers that we haven't seen even back into, the 2010s. We're seeing more sellers expire and go off market than we were at that time, which is really interesting. And so now it's flipped. The hot markets of the early 2020s, the South, is no longer the hot market. It's kind of the cold market. It's the buyer's market. Now the hot markets are the ones, the New Yorks, the Californias, maybe the Ohios. A lot of these places that weren't necessarily the boom towns, people were migrating out of them in early 2020s, now are the 2025 boom towns. So it's really interesting to kind of see this dynamic that buyers are starting to have an easier time buying, and they're starting to get their revenge, whereas they were previously remorseful about buying. So the second thing that we have to go over is interest rates. So what's going to change all of this? Well, it's going to have to be easier money, quantitative easing, or lowering interest rates for business and also for people who are buying houses. The hurdle has been that a lot of people expected rates to go down far sooner than we're at now, but they haven't. And the current administration, Powell and the FDIC, or the Fed, are not intending to lower rates anytime soon, possibly not even in 2025 at all, which is a far cry from what we thought was going to happen and lowering rates a lot earlier. And so what does all this happen? What happens because of all this? Well, the longer that rates stay higher, the higher the probability that the real estate market crashes, or that we start to get more and more desperate sellers, not enough buyers, so that we have an oversupply of sellers and undersupply of buyers, which means prices go down. Now, we are headed that direction. We are not there yet, but we are definitely headed that direction, and that's something that we have to watch. And so what does that mean for land investors, for house investors? Well, we gotta buy deeper deals. We can't continue to think that comps from 6 months ago or a year ago of comparable sales are gonna be what we're able to price our real estate off of today. In fact, right now in our business, we are taking comparable sales minus 5 or 10%, at least, even for houses, to be able to know what we're gonna be able to sell it for in the future whenever we're done with the projects. But I will tell you this, and this is what I would consider the third thing, is that during a recessionary time or a hard economic time that we are likely in or going into, the best businesses are the ones who can thrive and survive and adapt during this time. And in this time when a lot of other people, especially investors, flippers specifically, are running away from the business, house flipping, land flipping, you name it, this is the time to double down on your business. It's the time to double your lead generation. It's the time to go out there, make great offers to people, to watch your numbers. But if you can survive now and you can thrive through this time, you will come out with an incredible business on the other side. And that was my promise to you. If you can make it and you can survive this time, you're going to be way ahead of everybody else, because if you can survive right now, you can survive any market. You can ride the wave up, especially if you get some inventory on hand. So anyways, I hope you enjoyed this. It's kind of an overview of the 2025 market, where buyers are starting to get some wins finally after 5 years of getting pushed around. We actually have a longer video on this that Seth Williams and I did together that explains this over the course of an hour instead of about 10 minutes that this video is, and goes more into depth on these. And this is just our mid-year 2025 market update. You can find that on the REtipster YouTube or on the podcast as well. And appreciate you joining in. Hope you enjoyed this, and cheers to success this year. Thanks.